Well, hello and welcome to Business 360. I'm Ashmit Kumar, and here are the headlines that we're tracking this evening. A day of range-bound trade on the Lal Street. The Nifty and Sensex end flat. Mid-caps outperform rupee, closes flat versus the US dollar. A special court extends CBI custody of former ICICI Bank CEO Chanda Kochhar, her husband Deepak Kochhar, and Videocon Group founder Venugopal Dut till tomorrow. The public prosecutor said that the CBI did not get enough time to interrogate the three for their alleged role in the ICICI Bank Videocon loan case. Both Dut and Chanda Kochhar's lawyers argued that prosecution should show some progress before seeking extension of custody. Reliance completes 20 years of double-digit growth since 2002 when Mukesh Ambani took over as chairman. After successful forays into telecom and retail, the behemoth now eyes the spot of the world's lowest-cost producer of solar energy and green hydrogen. More than 50 flights were delayed and over 25 cancelled at Delhi International Airport due to low visibility. The Met Department has already warned of a fresh spell of cold wave conditions around New Year's Eve. The government steps in as complaints over instances of call drops increase. The Telecom Department calls for a closed-door meeting with telecom companies, raises concerns over quality of service. Russian President Putin signs off on a 5-month ban on oil exports to countries that impose the EU price cap starting February. The $60 a barrel price cap was imposed by European Union to sap Russia's funding for their invasion of Ukraine. The oil cap has been accepted by the G7 nations. Tesla stock tanked 11%, slipping to its lowest levels in more than 2 years. This after reports that the company will continue a week-long production halt at its Shanghai facility due to spike in COVID cases. Well, let's begin with the day's market action. A range-bound session saw Nifty and the Sensex end flat, but with a slight negative bias. Nifty Bank fell in line with the benchmarks, but mid-caps performed much better. PSU Banks led from the front. Prashant Nair now joins us with more details. Prashant, take us through the day's market action.
After 2 days of very strong pullback, the market consolidating a little bit. The Nifty ending down by about 20-25 points, but not before kind of knocking into an important level, which I'll come to in a bit. The banks also corrected a little bit more than the Nifty. Sectorally, there wasn't really one big pocket of gain or losses. It was more kind of distributed. Large cap gains coming through in names like Titan, Mahindra & Mahindra, Power Grid and Maruti. Actually, only 4 Nifty stocks ending with gains of more than 1%. Losses coming through, again, nothing large, but Bharti, Apollo Hospitals, Bajaj Finserv are names which lost in today's session. Broader markets, I mean, a little bit here, a little bit there. No directional move on the mid-cap and the small-cap indices. Market breadth, though, was positive, but not, I mean, in a huge way. Mid-cap gains, fertilizer stocks, as you can see on your screen, RCF, FACT, etc., did very well. GIC RE is come back into rotation. Adani Total, Ircon, you had Indian Pesticides, Lodha, which is Macrotech developers, Saregama and Devyani Foods, if I can name those which moved higher on the back of stronger volumes. PSU banks have had it very volatile. And today, in the last 30 minutes, they sold off quite aggressively. So IOB, Union Bank, Bank of India, actually, if you look at the Nifty PSU Bank Index, it's a sharp fall between 3 and 330 today. As I said, the Nifty's had a quiet session, much needed after all of the volatility the last 4 days. Thursday and Friday last week when the markets corrected. And of course, the bounce we had over Tuesday and Monday and Tuesday. Today was quieter. The Nifty is also left off after hitting the trend line all the way from June lows, which is at 18,170, which becomes the immediate level to take out on the upside if the market has got to do more from here on. Back to you.
Right, Prashant, thanks a lot for that update. But in keeping with action from Mumbai, a special court extended CBI custody of former ICICI Bank CEO Chanda Kochhar, her husband Deepak Kochhar, and Videocon Group founder Venugopal Dut till tomorrow. The public prosecutor said that the CBI did not get enough time to interrogate the three for their alleged role in the ICICI Bank Videocon loan case. Sandhya Gora now joins us for more. Sandhya, tell us, will these 24 hours be enough? Another hearing expected tomorrow?
See, that's something CBI is likely to answer tomorrow. Today, specifically, when defense counsels were arguing their case, they specifically asked that where is the progress, because CBI will have to show some sort of progress in order to seek further custody. Even the court also asked CBI what happened when CBI had the custody of all these three accused for last 72 hours. To that, CBI responded and said that the agency didn't get enough time to properly interrogate these people. Confrontation happened, but properly CBI couldn't continue the confrontation. Now, what we have gathered from our sources, and this is exclusive information which CNBC TV 18 has accessed, when CBI had the custody of all these three accused, CBI confronted all three of them. And see, if we want to see, the bone of contention here is that rupees 64 crore, which were transferred by Videocon group of companies to Deepak Kochar's firm, New Power Private Limited, Renewables Private Limited. And now why this amount is important? Because it was on 7th of September 2009 that ICICI Bank dispersed a loan of 300 crore rupees to Videocon International Group company, and immediately within 24 hours, the very next day, an amount of 64 crore was transferred from Videocon International to Deepak Kochar's firm. Now, according to CBI, this 64 crore rupee, this amount was actually a kickback which Chanda Kochar received in exchange of disbursing that loan. That's the illegal gratification. And this is where the angle of quid pro quo is there. But when the agency confronted these three accused, all three of them denied any quid pro quo angle there. And also, apart from that, Kochars told the agency that there was no question of repaying that money back to Venugopal Dhoot or Videocon for that matter, because that was not some loan, that was actually a genuine investment, a genuine business investment which the Videocon group of companies made in Deepak Kochar's firm. When Chanda Kochar was asked about her role in this entire disbursement of loan and how this amount went to her husband's company, to that she said that her husband and she herself, they did not interfere in each other's work, each other's profile, each other's work. So that's why she had no idea. She wasn't even aware that such an amount was transferred by Venugopal Dhoot to her firm, her husband's firm. And now tomorrow, CBI is likely to tell the court that what kind of progress the agency could make in these 24 hours.
Right, Sandhya, thanks a lot for that update. An interesting day ahead for you. Let's shift focus now to Delhi. Flight operations were disrupted at the Delhi International Airport due to thick fog impacting visibility. Now, close to 100 flights impacted as Delhi, along with northern India, grapples with the cold wave conditions. Danish Anand now joins us with the latest. Danish, take us through the situation at the Delhi airport.
Well, due to the foggy weather condition in the northern part of the country, several flight operations were impacted at the Delhi airport. Over 50 flights, which includes both domestic as well as international, they were affected by the foggy weather condition. There were at least 15 to 20 flights which are not operating from the Delhi airport due to various reasons. There were certain inbound flights which did not take off on time because of the weather conditions in the northern part and the eastern part of the country. As far as international operations are concerned, there were very few disruptions in the international arrivals as well as departures. However, the IMD has predicted that till 31st December, the cold weather condition is not likely to be that severe as it was a few days back. And similarly, even the fog is not likely to be that severe, but it is predicted that post 31st December, the cold weather conditions will be more harsh and we can expect more and more foggy conditions in the northern part of the country. However, IMD has also said that these conditions are likely to change and they're likely to get impacted by the westerly disturbances. But as far as the flight operations are concerned, the Delhi airport today informed that the visibility in the early part of the morning was around 500 meters, and as the day progressed, the visibility in the Delhi airport also improved. So all in all, if we see, the harsh cold winter condition as well as the foggy condition is likely to make a comeback post 31st December.
Right, Danish, thanks a lot for that. Now, Reliance Industries has completed 20 years of double-digit growth since 2002, when Mukesh Ambani took over as the chairman. Now, after successful forays into telecom and retail, the behemoth is now eyeing the spot of the world's lowest-cost producer of solar energy and green hydrogen. Sonia Shenoy is standing by to walk us through Reliance's landmark journey under Mukesh Ambani over the past 2 decades.
Well, the year 2022 marks 2 decades of Mukesh Ambani's leadership at Reliance Industries. We take you through his journey and the exponential growth the group has seen over the last 2 decades. Let's throw it way back to July 2002 when 45-year-old Mukesh Ambani took over Reliance Industries after the demise of his father, late Sri Dhirubhai Ambani. Since then, Reliance has achieved consistent and strong double-digit growth. The market capitalization of Reliance rose at an annualized rate of 20.6% in the last 20 years, rising from almost 50,000 crores in March 2002 all the way to 17.81 lakh crores in March of 2022. In fact, we've put together a table of the key financial parameters and how most metrics have seen high teens growth in the last 2 decades. If you look at the revenue and the net profit itself, they've risen 15 to 16% on an annualized basis over the last 20 years. Not just that, exports, assets, net worth have all gone up in excess of about 15% and almost 20% on asset growth for the last 20 years for the group. Well, the gains are not for the group to enjoy alone. Reliance has successfully and consistently generated wealth for investors. Reliance added 17.5 lakh crores to investor wealth in just the last 2 decades, adding an average of 87,000 crores to investor wealth every single year. Also, Reliance has displayed agility and relevance by investing in new and upcoming businesses. Reliance's E&P business made its first hydrocarbon discovery way back in 2002, and production started in 2009. After that, Reliance Retail started its operations as well, and in 2016, the big breakthrough came in when Reliance entered the highly competitive telecom industry. Reliance Jio started operations in 2016, and this led to the cost of data per GB falling from 500 rupees in India to 12 rupees post the launch of Jio. Not just that, India's ranking in broadband data consumption as well moved from 50 in 2016 to number 1 in 2018. And this at a time when the traditional refining and petchem business expansion continued. So from a single refinery in 2002, Jamnagar is now the world's largest single location refining complex. In fact, Reliance has added some of the world's largest downstream units as well, setting up the world's largest refinery off-gas cracker at Jamnagar and added the world's largest petcoke gasification unit. The last 2 decades have been full of milestones for Reliance, but now let's look ahead into the future. Reliance is committed to investing 75,000 crores in the next 3 years in its new energy businesses and aims to become the world's lowest cost producer of solar energy and green hydrogen. Reliance will be setting up 5 integrated gigafactories at Jamnagar to emerge as the world's lowest cost producer both of solar energy and green hydrogen, and the plan is to become net carbon neutral by 2035. Not just that, Reliance will start 10 gigawatts of solar PV cell and module factory. That happens in 2024, and that will be scaled up to 20 gigawatts by 2026. Remember, it was also under the leadership of Mukesh Ambani that Reliance set a record of capital fundraising way back in FY21. It raised more than 2.5 lakh crores through rights issue and minority stake sales in Jio platform and Reliance Retail Ventures to global marquee investors. During FY21, Reliance was the single largest FDI generator for India at a time when most companies were struggling to survive. Finally, let's wrap this up with Reliance Industries' commitment to corporate social responsibility. The Reliance Foundation was set up way back in 2010 with Neeta Ambani at the helm, and it has so far touched more than 6.3 crore lives and is India's biggest CSR initiative both by reach and by spend.
Right, so some stellar numbers there by Mukesh Ambani-led Reliance. But with that, it's time now to slip into a very short break. But coming up on the other side, 5 out of 12 companies, including Ola and Uber, scored a 0 in a report that rated digital platforms on the basis of work conditions for gig workers. Balaji Parthasarathy, the principal investigator of Fair Work India and one of the authors of this report, joins us next. Welcome back. Let's turn the focus on the gig economy now. 5 out of 12 companies, including Ola and Uber, have scored a 0 in a report that rated digital platforms on the basis of work conditions for gig workers. PharmEasy, Dunzo and Amazon Flex also scored a 0. Now, the report was prepared by Fair Work India team in association with the Oxford University. Urban Company, meanwhile, scored 7 out of 10, which is the highest score out of the lot. The companies were evaluated on 5 parameters, including pay and working conditions. I'm now joined by Professor Balaji Parthasarathy, Principal Investigator at Fair Work India and one of the authors of this report. He's also a professor at the International Institute of Information Technology, Bangalore. Professor, thank you so much for joining us. First question, Uber, by its own claims, says it's the largest employer after the army and the railways. Ola, Swiggy, Zomato are not that far behind, yet the score reads 0-0 for Ola, Uber, and 5 for Zomato, 5 for Swiggy rather, and 4 for Zomato. What is the condition? What is the reason behind such scores?
Well, to be sure, I mean, there might be large platforms offering work opportunities for a large number of workers. But I think the report really focuses on the conditions that these workers are experiencing, when they go out and work on those platforms. And in the report, what we're really doing is holding up a mirror to the conditions. And in some cases, the conditions are not anywhere as they should be. And remember, the conditions that the Fair Work Project is looking for are really very minimal conditions, right, in terms of what it means to have a livelihood. And that's where I think many of the platforms have been very unsatisfactory.
Sure. Professor, let me ask you a supplementary question. Very recently, we've also seen a petition that is filed before the Apex Court. That petition has been filed by the Indian Federation of App-Based Workers. As per their petition itself, in their words, they're saying that the work is tantamount to quote-unquote exploitation through forced labor. From your reading of the situation, does that appear to be the situation on the ground with very limited benefits being extended to such gig workers?
Yeah, see, I think the larger issue here is that the opportunities on platforms are often projected as one which are characterized by flexibility, where workers can come on when they want, work for as many hours as they feel it's necessary, and then make all the money that they would like to do. But I think the larger issue here is that if you pay close attention to the actual conditions that workers experience, what flexibility really means is sort of really controlled by the platforms, right? There is a significant asymmetry between workers who are actually considered, independent contractors or partners, or in some cases even the termed entrepreneurs, versus, technologically powerful and sort of financially deep-pocketed platforms. And because of this sort of asymmetry or sort of between the platforms and individual workers, you find that what actually, how sort of flexibility is actually plays out in practice is something that the platforms tend to control. And this is a sort of a primary reason, as we've highlighted in the report, why you see these conditions. Now, what kind of adjectives you want to add to that, that's a separate issue. But I think what we're really trying to do is to show the empirical, the reality of what the conditions that workers face.
Sure.
And I must sort of also quickly add that
Professor, one of the
yeah, please go ahead.
I understand. Of course, the petition is still sub judice, so we'll limit our conversation on that. But let's move forward. One of the concerns that emerged as a part of this report was that there is a noticeable hesitancy on part of a majority of these platforms in either negotiating or even acknowledging or recognizing collective bodies that represent such gig workers. Why is that? Why is there such hesitancy?
See, again, it goes back to the point that these workers sort of are in a sort of a legal gray zone. They are considered independent contractors or partners, like I mentioned earlier, and the platforms say that if they are independent contractors and partners, they're not really employees or people whom we would like to sort of negotiate with or we need to negotiate with. It can be on a one-on-one basis. Right? And as a result, there is absolute reluctance on the part of platforms to sort of sit down, listen to a collective voice, listen to more often than not legitimate collective concerns that workers might have.
Sure. Professor, very recently we interacted with a very senior executive of Uber, Tony West. Tony highlighted that often employment is seen as a binary of either being a contract worker or on the other extreme being a regular employee associated with the company. Here he said that the Code for Social Security identifies a third category of workers, which is gig workers, and subsequently acknowledges that there is some amount of benefits that need to be extended commensurate to the flexibility that they speak of. And he spoke of extending benefits like insurance, leaves for some of these gig workers, some of these drivers. What do these assurances mean going forward, even while the Code of Social Security is yet to be notified?
Yes, precisely. I think the Code on Social Security, is one of 4 codes that have been passed by Parliament between 2019 and 2020. However, even the Code on Social Security, which, by the way, is the only code that actually mentions gig workers or platform workers, is yet to be operationalized, right? The code on, industrial relations, the code on wages, and so on, occupational safety, none of them even mention gig workers or platform workers. In our case, our primary interest is with workers on digital platforms, so platform workers. Now, if you look at sort of the concerns of workers that have emerged from our study, for instance, wages is a sort of compelling and primary concern for them. They're worried about what is it that they're going to be taking home at the end of the day, and if the code on wages doesn't mention that, I think that leaves open for the gray areas, the gray zone still remains. And we've also heard from platforms and who say, look, yeah, we do have a code on Social Security. Let's just wait for things to operationalize, and we don't really know when that is going to happen. So until that happens, platforms are quite happy not to do anything about it.
We're running out of time. I'll just give you 30 more seconds, Professor. In the absence of such a code, in the absence of a legal framework, what is the way out for millions of gig workers associated with these platforms?
And I do think we need stronger regulation. There's absolutely no getting away from that, to ensure that workers are given either employee status or some other status, depending on what it is that they voice. And in the absence of regulation, this myth about having these free markets work, I think, is only going to lead to the long-term deterioration of the work conditions on the platform economy, which might actually jeopardize it.
Sure, Professor. It's an ongoing debate. We will continue to see, of course, more aspects of it as the story progresses. But we'd like to thank you for taking out your time and for shedding more light on the subject. But that's all the time that we have for. It's a wrap on this edition of Business 360. Thanks so much for watching. Stay tuned to CNBC TV 18. The news and updates continue on the other side.